Hi there, welcome to GrainTV. I'm Kevin McNew. It's Thursday, February 4th. We had a down day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn off 2.5, beans off 2.25, and wheat, the leader to the downside, losing 7.25. News out today centered a lot on the financial markets. The US dollar taking its biggest hit ever yesterday, losing 1.6%. Today was not much better, losing 0.8% on top of yesterday's loss. We continue to see pressure on the U.S. economy. Started on Wednesday with manufacturing data showing weaker than expected numbers. Friday is going to be a jobs report from the U.S. government, and that will be closely watched to get a sense of the state of the health of the U.S. economy. On crude oil, we saw crude oil give up yesterday's $3 gains, giving up $1 today. Crude oil continuing to come under pressure from stocks that are growing. EIA's Wednesday inventory report showed a build in crude oil stocks. That's the third week in a row we've had inventory numbers exceed analyst expectations, but the market has rallied on that news, but come back as a result of sort of flagging oversupply issues. Let's take a look at the numbers that came out in grain, and there were a lot of them to digest today. Let's start with the usual Thursday numbers of export sales. This was pretty shocking to the trade, but we didn't see much price action as a result. On the high end, we had corn exceeding analyst expectations, coming in just a hair over 1.1 million metric tons, well up from last week's 817,000. and above the high end of 1 million metric tons. Soybeans, this was the big disappointer. We knew going into this report we had the 395,000 metric ton cancellation from China that was announced last week, so we knew that would be factored into this report, but we still looked for, analysts still looked for at least some positive export business this week. 400 to 600,000 metric tons was expected. You can see we came in negative, net cancellations for the week, so that big 395,000 metric ton deal that was canceled, there was very little new business to offset it. In fact, there was not enough business to offset it, so we ended the week with negative or a reduction in export sales. On wheat, another disappointing week with 66,000 metric tons of old crop, 87,000 for new crop. This continues to be a problem for the wheat market, and you can see the wheat market sold off as a result. News out of South America this morning, Brazil's CONAB forecasting agency pegged corn at 83.3 million metric tons. That's up from their January forecast of 82.3 and well above USDA's 81.5. On soybeans, they dropped their soybean forecast for Brazil to 100.9, getting closer to be in line with USDA's 100 million metric tons. On the other side of the continent, looking at Canada, we saw Canada's stocks numbers that were mixed as well. We saw wheat coming in below estimates, 20.7 million metric tons of wheat stocks as of December 31st versus expectations of 21.8, and canola coming in on the high side at 12.1 million metric tons versus 11.5 million metric tons. And that, of course, weighs prominently in the oilseed market because that's where a lot of the canola demand comes from. Let's talk about soybeans and look at the chart, and we can see we've been in this sort of flat line range as we have in corn as well. But what we're starting to see in the last few days is a breakdown. We're starting to see an inability of this market to really hold above 880. And in fact, today's bar had reached as high as 884, but we quickly sold off from there as a result of that negative export sales news. So I'm worried we're going to break down to these lows that were set last week in the 868 region, and then if we break through that, then it may set up a return to the lows in the 850 region. So if you're a producer, I think we've been marking time here for the last few weeks on a fairly stable course or a fairly choppy, narrow course of trading. I'm worried we may be breaking out to the downside here. So if you're a producer, I think it's really time to start paying attention, because between now and spring planting, this may be the last shot we have for some reasonably decent prices in comparison to what may be coming. If you have any questions or want help in your own grain marketing situation, give us a call, 877-472-4607, or visit us online at grainhedge.com.